Of course, I'm going to go with something that's a little bit higher risk because the returns are better. It's important though to understand that when markets are not doing well, and we saw this back in the early 2000s, we saw this back in 2008, we also saw this a little bit during COVID, and again we saw some smaller corrections along the way as well. So the most recent would have been 2022. In situations where you have a higher risk portfolio, you tend to see a bigger decline in your investments in those particular years. So say for example, in 2022, you had a portfolio where it was considered higher risk. Your investments were probably down anywhere between 10 to 20%. Whereas somebody who had a portfolio that was considered lower risk or medium risk was maybe down 5 to 10%. This is really why it's important to understand the risk factor, because of course everybody wants to make as much as possible, but you also want to make sure that you're protected when the markets go down.